Well, I'm delighted today to be speaking to Tim Childe, who's the head of Quilter Cheviot International and the Jersey office. Welcome, Tim.
Pleasure.
Thank you for taking the time to speak to me today. Tim, it's great to be in your offices here in St Helier with a lovely sunny day outside. Exciting times here at Quilter Cheviot International. You're just approaching your 50th anniversary. It'd be great to hear a little bit more about the business and where you are today with it, with this anniversary in mind.
Yeah, thank you. A pleasure to be in front of you and answer a few questions and be up to speed with what we're doing here. So as you say, this year marks our 50th anniversary of our being established in Jersey, 1973, from a very small setup in St Helier, just across the road from quite a famous restaurant called La Caponina. You may have been there.
Yeah, absolutely.
A team of 4 or 5 people, a company called Roger Mortimer and Company. And then since those very early days, the following 50 years, we've gone through various guises, various ownership structures, from Roger Mortimer to Shepherds and Chase, to James Capel, to Allied Provincial Stockbrokers, to Quilter Goodison, to Morgan Stanley Quilter, to City Quilter, and then ultimately to Quilter with a management buyout in between and an old mutual ownership in between. So here we are today, we're part of Quilter PLC, and Quilter Cheviot forms part of the high net worth division of Quilter PLC, which is an integrated wealth firm listed on the London Stock Exchange with assets in excess of 100 billion sterling. So quite a sizable outfit. We obviously here, we focus on discretionary investment management almost exclusively. Pretty entrenched in the trustee space, but also we have a long established presence looking after private clients, many local private clients, but also clients dotted all over the world. And with an international name tacked on the end of Quilter Cheviot, as the name suggests, we do a lot of work internationally. So we work with professional intermediary partners and friends here and in other jurisdictions. We have an office in Dubai, which is over 7 years old, doing very well. And we also have a license since 2007 to do cross-border investment management for South African clients. And obviously we do business in Switzerland and other crown dependencies. So exciting times with markets always. We've had to adapt and evolve along the years as the markets have changed, as our client targets have changed. So very fluid business or industry, as is the same with the legal industry and accounting industry, of course. But we're enjoying what we're doing. Our numbers have been expanding, and we thrive on opportunities generally.
And why do you think clients come to have their money managed in Jersey? Are there some common factors that lead them to be motivated to want to have assets managed here?
I think it's the quality of the regulation. That the jurisdiction is extremely well respected as an international finance centre. One would say it is probably one of the most respected. I would say that, wouldn't I? Being part of the industry here, but you hear it, frankly, when you're travelling, you're going through Middle East or Far East. We set our store out to be a very well controlled and regulated jurisdiction, yet commercially aware and flexible. Our regulator is in tune with the needs of the industry, as is Jersey Finance, and obviously it's a competitive landscape globally. But generally, I think you've seen the quality of business being written in the islands improve steadily over the decades, and that's right and proper. That's the case.
And the client base is global, as you mentioned, like South Africa, Dubai. Perhaps you'd say expat, perhaps places where there's links back into the UK.
UK res non-dom, expats, big part of the market for us. We have an international investment offering, multi-currency, big research capability, arguably one of the biggest research offerings in the DFM space in the British Isles.
So is there a sort of sterling UK bias to what you're doing, do you think? Or
not really, very global. Very global in our approach. We our research team affords us that opportunity to look for the best opportunities. And hence we use that opportunity, and a lot of our clients think globally, frankly. They might be based in the UK, but they see the world as a marketplace to eke out opportunities wherever they may be. It may well be also the case that the leading companies in the sector we're covering may well be in the United States or in Europe or in Asia. And clients expect, particularly if it's a sophisticated client with exacting needs and they want something highly bespoke, well, you've got to cater for that need. So, hence, as the market has evolved, products have evolved, different types of asset classes. You're now looking at infrastructure, in the alternative space, commercial real estate, commodities, all sorts of alternative hedge funds, et cetera.
So much more than stock picking, isn't it?
So much more. Yeah. And of course, dare I say it, volatility is a bit of an issue in markets sometimes, more often than not in recent years, dare I say it. But hence, you need the toolbox to adapt to these testing market conditions. And hence the investment we've made in research capability, but also in systems, in client solutions, and you've got to keep on moving. Simple as that.
And I guess in these volatile times as well, the clients need to feel this direct access point to the person involved in managing the money and accountability, isn't it? Particularly if they're the other side of the world, they need to feel...
Yeah, I think that's where we're not saying we're exclusive in this space, of course we're not, but having the dedicated investment manager in the office of Quilter Cheviot, we have 14 offices, we have a large team of investment managers, probably one of the biggest discretionary investment teams in the Channel Islands here in this office. The investment manager is the relationship manager and vice versa. He or she will be the initial point of contact with the client. They'll onboard the client and they'll be with that client hopefully through multi-generations. But they are completely responsible for the management of that portfolio.
Give them a deep understanding, client circumstances,
and then,
nothing gets lost.
And in times of strife and in times of uncertainty, clients want that peace of mind that when they pick up the phone or send an email, someone's going to be there knowing how to respond to them, what solutions they need to provide, and have that comfort and the peace of mind. And I think having that capability really is the bedrock of our success, really, in terms of we look after families now, probably the third generation of some of the families, so many years, and that only comes about if you're dependable and you can give a consistent return. We're not going to be perfect, but clients want honesty. They want
communication. Don't go missing when times are tough.
And as long as they can see you're giving your best effort, that's half the battle, really.
And obviously, there's lots of new themes in the investment world. Responsible investing, particularly in the trustee market as well, it is a big one. How do you see that here at Quilter Cheviot?
Yeah, very important. And some of our clients they expect us to adhere to responsible investment generally, and it's woven into our research process actually. We're a signatory to the UN Principles of Responsible Investment. Very early on, we had an A rating, and we have our own climate assets fund. We have quite a number of ethical investment collectives within our research capability, and we have different responsible investment options for our clients, so they can go down one of three paths. So, of course, it's important. We engage with the companies we invest in. We engage with the boards. So stewardship is really important for us. We also screen out companies that we don't agree with. If we don't agree with their practices, they'll be screened out of our research process as well. So yeah, it's very important, and we have dedicated personnel. Actually, we have our own responsible investment team. We have our own climate assets fund, a Quilter Cheviot Climate Assets Fund, award-winning and growing in assets. So we think we've got a prominent place in that sector, but it's part and parcel of everything we do now, really on a daily basis. When we formulate client solutions, we think about responsible investment. We think about the impact of those choices, and not just that. You would have seen in reception. We're a Rewild carbon partner of Durrell, so we have our carbon offset, and that's we've got a close relationship with Durrell, one of the sort of institutions we support here, one of the charities, if you like, and we think that's very important as well. So if you link on from responsible investment, ESG, obviously you can link that into CSR as well. And again, it goes hand in glove with our ethos, our culture. So we think it's very, very important. It's our duty really to support local communities, support local charities, schools. So we'll spend quite a lot of time with schools helping students with career paths, CV writing, interview techniques and the like. We'll go and present to classes on economics. We might take in our IT our technology analyst, go in and talk about artificial intelligence or cloud computing, and that always
it's living and breathing the values, isn't it?
Exactly right. But yeah, because now it's so important to embrace the change of technology, but also embrace sort of the current generational thinking. And it's all well and good having 252 years of history with 1771 established, but that counts for nothing to a next gen client, because they want to think about where you're going to be in the next 10, 20, 50 years, not what's gone in the rear view mirror. So we've got to stay relevant.
A lot is made of next gen clients wanting to invest differently, and next gen is a very broad category because it can take in from someone who's just left university through to someone in their 50s who's yet to inherit. So, I mean, what's your view on how the next gen clients in this broad grouping want to have their money managed over a long term with this lens?
Yeah, I think we shouldn't ignore the merits of a personal relationship. There's lots of focus on artificial intelligence. Now, AI can do a lot of things, and robots can do a lot of things, but being face to face with a client or a family across a boardroom, giving that sort of level of trust and confidence, that's difficult to do that from an AI perspective, I would suggest. I think the relationship factor is really key, and so that is never really going to change. What will need to change, and it has done, of course, with firms like ours, is the investment in technology. So making our systems fit for purpose in terms of reporting, maybe a client, having access to client assets through our client portal. That's always evolving. And
there's an expectation that service will be offered digitally.
It's really a given. But also in terms of how we see the world. So clients are one thing, making sure that they see that our offering is appropriate. So we have asset classes and solutions that are moving with the times, that are fluid, liquid, with and being adaptive, because obviously economic cycles ebb and flow, risk profiles of clients ebb and flow, and we need to make sure that we've got avenues where we can take them down in terms of reducing risk, increasing risk, generating income, cash flow requirements, you name it. So we look after charities where they might need steady quarterly income flows, or we might have people who are dependent on the healthcare costs being met, etc., etc. So, hence the bespoke offering of a firm like ours, I think, should generally cater for all those needs. But you talk about next gen, staff now, we find when we interview potential new members of staff, he or she will, of course, look at the company, its history, its offering, and what we do as a business. But they also want to know about the ethos, the culture, the flexibility we afford our workforce. I think give and take is really, really important, and that, I think, it lies behind the longevity of service of our staff. We have average 16 years of service across our 32 staff members in this office, which isn't bad. Some of our staff have been here 20, 25 years. I've been here for 30, 33 years now, actually. But
younger people need to see people committed to the business, don't they? The leaders reflect what they
That's
want
right,
to do,
leading by example, actually. And I think, I would say this, wouldn't I? But I see the passion amongst our staff, the newer staff members and the older staff members. We've got a great team spirit, and I think collaboration is so important. And none more so than recent years with the pandemic, for example, where that was a really challenging time, and where it was we made sure we linked up with all our staff on a regular basis. We had sort of dial-ins and regular Teams calls, and as many sort of socially responsible gatherings as we could, etc., to see us through that. And of course, there were lessons learned from that, hence more hybrid working practices you've seen in offices. And I think by having that sort of cohesion and collaboration through periods like that just bonds the staff, unity, I find. And we have very low turnover of staff, touch wood, but we're never complacent. And so we listen to our staff. We have regular staff meetings, and we just want to make sure we're in tune with how they see the world and what their expectations are of us as an employer, and what they want to see us do more of in terms of stuff we do in the community. Like we do volunteering mornings, like on a Saturday morning we'll go off and dig some flower beds or help in a field and plant trees or whatever it might be. Yeah. And you see lots of that in Jersey. It's great for the community, actually. A litter day, picking up litter off beaches or in woods, planting stuff.
And I guess community cohesion is important here, because you obviously have, it's an attractive place to be. The high net worth relocator market is part of the ecosystem here, isn't it? And but then making sure that the local population feels the benefit, isn't it? It's a balance, and these community projects and community involvement is a critical element, isn't it?
Yeah, I think we've seen that with in the finance industry. It isn't just the only industry that does it. Of course, all the sectors play their part in helping local charities, helping local causes, and I think it's great to see. And it's vital, actually, because government funding can only go so far, right? So hence, if we can help out, launching a project or providing initial funding for some foundations going into a building of a new sort of youth centre or something, who knows? And of course, we do that on a bigger scale with our Quilter Foundation charity. It's a UK-based charity. I'm a trustee of it. I'm actually the treasurer of it as well. So it's a London-based charity, and it's 5 years old now, and it does a huge amount of good, supporting on a big scale areas like young carers or big youth organisations. But we also now have a local community fund where we can get extra reach around our regions, and even making contributions of £5,000, £10,000, £15,000 to some of these local causes. That's big news. And so we're doing a bit more of that as well now throughout the regions. In Jersey, we've been helping some local charities. One is called Grow. Another one is Healing Waves, based on a beach, strangely. St. One's, where they help sort of people with sort of incapacitated with sort of physical disabilities or mental disabilities get into the water and help them surf and just have an experience of water. I mean, things like that is touching for us as employers and local firms to do our part, really.
And I mean, you live in a beautiful natural environment like the seaside, and people enjoy the countryside here on the island. Do you think that also informs what clients want, in terms of awareness of investment environmentalism, what they do and what impact they make on the planet, as it were? Are they, feel as aware of that because they're in a nice surrounding?
That's right. I mean, you're right. The only problem is we're on an island as well, of course. So getting off the island usually involves a bit of a carbon footprint. So
inevitably, island life does.
So hence, you will find that a lot of the corporates here will be offsetting their carbon, and which is right and proper. But I think it's every part of our daily life. Even the way we live at home, we think about recycling and all the rest of it. Likewise, we think about how we operate as an office. How we reduce.
Are you doing everything you can?
Yeah, and there's more to do always.
And the 50th anniversary has given you pause to think about looking back and how far and how much the industry has changed. But as you look forward for the business, what do you see? What's exciting about what you're doing here? What do you hope to do as we move forward in the short, medium, and longer term?
Yeah, I think technology will be a challenge and an opportunity, actually. So lots of focus on artificial intelligence right now about the opportunities and the risks it poses.
Do you think having lots of information is a challenge? Because if you're taking a long-term view on investing, to have short-term information in clients' hands,
it's a very good point. Yeah, I think you're right in that immediacy can cloud long-term objectives and aspirations, and so it's always a constant challenge for us. In fact, I was on a client call just before I came in here. It's always a constant challenge for us to sort of set out at the outset what investment means in terms of risk, time horizon, volatility, and we go into so much depth, way more than we used to, frankly. You may well read a press article that was in the papers about a week ago, marking our 50th anniversary in the local Jersey Evening Post. And I had alongside me one of the original founders, Alan Corbin.
Yeah.
And he basically said that back in the day, an account was open on one piece of paper, name, address, bank account details, sign it, job done, off we go. And of course, then there was a 14-day settlement period, so you didn't have to settle until the end of the 14 days, and that was just on the balance of the plus or minus of the trade. It's remarkable.
Yes.
Now, of course, instant settlement and immediate trading, and everything's electronic. So we've evolved a lot over that time, but the relationship factor has not changed. That has been the one constant where, in our industry, we're in a very competitive space in the investment management sector, and it doesn't exclusively boil down to the relationship, but the relationship is a core part of it, because it's really a given that if a trust company or a private client approaches one of the top 4 or 5 entities in our sector, then they would expect to see a very high level of service in terms of personnel, experience, offering, track record, etc. The defining element usually is the relationship. It's the glue that puts it all together, and actually the success of that transaction, if you like, is the long-term relationship. So if you're still looking after the clients 10, 20, 30 years later, and you've adapted along the way, and you've helped them navigate through this challenge or that challenge, then you're doing your job. So I think chemistry is really, really important, and you'll know this in your industry, of course. So we spend a lot of time listening to the clients, not just we try and hone it to a point where we go in and learn first before we start spouting off about what we offer, because it's only when you've listened to what they're looking for and what their needs are and where they want to go, then you can tailor it afterwards, because it's almost insulting to say, well, this is what we're going to do for you.
Prescriptive.
And so invariably, on occasion, we've had a situation where we've said, look, we're not for you, or you need just a simple bank account because you want zero risk and you want no time horizon. So just be sensible, and we'll do that for them, because we always have to act in the client's best interests. So I think the relationship factor is really going to be a constant, but we need to see that our offering remains appropriate. We've had challenges in recent years, like crypto, for example. Ethereum, different types of digital currencies. Obviously, more regulation coming that way. Of course, we've seen, but will that be a viable asset class in time? Currently isn't, with a lot of houses, but it may well be in time. So we have to make sure that our research capability adapts to that. Also, I think risks might change, because volatility in recent years has increased, steadily, and I think attitudes towards investment, attitudes towards risk will evolve, actually. So I think risk appetite might be a bit more curtailed than historically has been the case. 2022 was a salutary lesson, where you could be that the most apparent safe asset classes could come under quite a lot of pressure because of a freak occurrence in the inflationary backdrop, obviously a geopolitical event like the Ukraine war, surging oil prices, etc., etc. So black swan events, you never know, they might increase in frequency, and hence I think the need for active investment management, I think, is even more important now. Is even more in demand, because I think clients want peace of mind. If they're committing hard-earned life savings or earnings to the markets in some shape or form, they want to know that there's a degree of consistency and a given level of behavioural pattern, so they can sleep at night and have faith in what they're doing.
Do you think there's challenge in keeping the faith in some of the green or responsible strategies where you have years like last year where actually, the oil or the stocks, they perform better, and
that's
people
a very,
worry
it's
what
a
they're
very,
doing?
very valid point, and in fact, very timely, because you're seeing almost on a daily basis, and we've just seen quite significant outflows out of the ESG space, and in a number of large institutions, large pension fund institutions, for example, migrate, I wouldn't say back, but change their view slightly back in favour of fossil fuels, etc.
Because they're under pressure.
And they're under pressure to deliver returns. They've got commitments to shareholders, to pensioners, etc. So there will always be that pressure. And invariably, we've seen it as an industry, we've seen pressure swing from passive versus active. How many times have you seen that debate?
Absolutely.
Every 3 years, passive every time, of course. And then, of course,
now's the time for active managers.
We have a 2022 thrown in there, goes back the other way. Ever will be the case. And so you'll see the same. We don't believe there's a ground shift away from the need to embrace responsible investment. That is not going to go away at all. If anything, it will increase. But you'll see patterns of behaviour evolve in times of stress, in terms of returns. Fully fledged ESG strategies did come under pressure last year, as you quite rightly say. But
with the right time horizon, though, it's the way the lens through which you look at it.
Exactly right. If you're looking at it for a 6-month time horizon, wholly different. 5-year plus, you ride it out. If you're in quality, it's well managed, and you've got sort of good communication between the managers and the underlying client. I think they'll get you there.
And the high and the ultra high net worth client are managing with that longer time horizon, often in many cases, aren't they? They've got a different view to many
exactly
investors.
Right. And I think it's the nature of the client that we target and we look after. If clients want to sort of do day trading, and they want to look at crypto, and they want that all that sort of super excitement, we're not a house for them. And they would probably do that, link up with some sort of digital trading platform, and there's plenty of them out there, and good luck to them. But if someone's looking for consistent returns, long-term relationship with a manager who's going to see them and their family through the years ahead, and build the pot and adapt accordingly to their needs, then our traditional industry is really the box they would probably tick.
Great. Well, look, Tim, terrific to talk to you today. Thank you so much for speaking to me. Look forward to sharing this interview.
Lovely. Thank you, David.